Samit, you can start.
Sure. A very good evening to all our members, seniors in the profession, ladies and gentlemen, present here today for this much awaited session arranged by the Saraswat Chamber on a lovely Saturday evening. I, Samit Saraf, am a board member of the Chamber and today's host for the session. Before we begin, I'd like to take a couple of minutes to talk about the Chamber, the Saraswat Chamber that is. Saraswat Chamber, formerly known as Global Chamber of Saraswat Entrepreneurs, was formed on 12th September 2019 as a Section 8 company, mainly to promote trade and commerce within entrepreneurs belonging to the Saraswat community in India and across the world. Our sponsors include Saraswat Bank, and we are grateful for their support to our chamber since the inception. I would like to appeal to everyone on behalf of our chamber to become a member. To know more, you can visit our website www.saraswatchamber.com and know more about it. Moving ahead, I would like to make one announcement before we get into the session. Kindly ensure you're on mute and your video is off. And with regards to question and answers, please mention your questions in the chat windows and we will take it from there. Today's topic is a very interesting one. A tightrope walk as an independent director. This session would cover important aspects about the world of independent directors, surely a tightrope walk. Also about MSMEs and how PE, VC funds evaluate investments in such entities. And then we'll move on to the new age concept of ESG, that is environmental, social, and governance, and its ever-growing importance in today's corporate world. Our esteemed speaker for today is CA Nagesh Pinge, a multifaceted personality having worn multiple caps during his career spanning 38 years. I'll briefly introduce sir. Nagesh Pinge sir is an expert in ethics, corporate governance, risk management, and internal audit. He is a chartered accountant and law graduate from India. He has also completed the executive education program from the Stephen M. Ross School of Business of the University of Michigan, USA. In a career spanning 38 years, Mr. Pinge has worked with many organizations of repute. He retired from Tata Motors in November 2016 as Chief Internal Auditor, Risk Management and Ethics. Prior to that, he was Chief Internal Audit of Reliance Retail Limited and JSW Steel Limited. Mr. Pinge has also worked for ICICI Bank and its group companies in risk management as the Chief Risk Officer, Regulatory Compliance, and Internal Audit as a Group Head of Internal Audit. He is an independent director on many companies, that is Goa Carbon, Arvind Fashions, MCX Clearing Corporation, Aditya Birla Sun Life Insurance, Automobile Corporation of Goa, Inventia Healthcare, Hero Housing Finance, and Utkarsh Small Finance Bank. That's quite a lot, sir. Professional outreach about Mr. Pinge. He has been the past president of the Institute of Internal Auditors India. He is a recipient of the ACIIA award given by Asian Confederation of Institutes of Internal Audit for outstanding contribution in the field of internal audit for the year 2017. He is also a recipient of the ICAI award given by the Institute of Chartered Accountants of India for the year 2014. He is a regular faculty at Masterclass for Directors being conducted by the Institute of Directors in India. Mr. Pinge has authored a technical guidance note on risk-based audit for banks being published by the Institute of Chartered Accountants of India. He is a regular guest speaker at many conferences on internal audit, risk management in India and overseas. His presentations are very informative and he shares his rich experience and global perspective as we have him today, and I'm sure we're going to have a similar experience. Sir, let's just dive into the session for today. The first question that we're going to take is one that has been on my mind personally for a long time. You had a great career as Chief Internal Auditor of Tata Motors, and prior to that, almost 3 decades, you were deeply connected with BFSI segment. With such deep and hardcore relevant experience, I'm sure you could have started your own internal audit practice or advisory firm, or you could have also alternatively joined any of the big fours to lead internal audit division or risk management division. But somehow you seem to have chosen the road less traveled. During our interaction before this session, what I got to know is that you now only work as an independent director. Personally, do you think it's a great profession?
Thank you. Thank you. Hi, Samit. Thanks for introducing me so nicely. So thanks, and thanks to Saraswat Chambers for inviting me, their own member. So it's a privilege and always an honor to be part of Saraswat Chambers. So thank you for this particular thing. I think you are right. I think I am enjoying what I'm doing as an internal auditor. I mean, as an independent director. In fact, I must say that retirement from Tata Motors, I was for a while wondering, should I take on any of those assignments that you talked about on that account? That means again, it's like, you're standing on the treadmill, and again, the treadmill will start and the speed will keep on increasing day by day kind of things on that account. So I thought, let's not take that. I did attempt with one of the private equity firm. That was a great learning for about 1 year, but too much of traveling and too much of, assignments coming your way. It was, I thought, I think, it's better to, take a pause on that account and do this kind of things on that account. And I'm a firm believer of, some of those typical old methods that people have followed all throughout. They call there are 4 stages of life in our things. Previously we used to call them ashram system. We used to have what we call the brahmacharya. Then we have brahmacharya is where the student, you learn a lot on that account. Then you take on the responsibility as the owner of a house called grihastha. And then a stage comes when your kids are good and competent, then you think you should move out of that hands-on kind of work, pass it on that particular responsibility to them. And then you move to what you call eventual sannyasa. But prior to going to sannyasa, you get into something called vanaprasthashram. That means you get ready to go for that sannyasa. That's where you have just left from grahastha. You go into this particular, sannyasa ashram, you're getting ready on that account. Prior to that, you get ready. And that's a great time for you. It's a twilight kind of zone where, in that typical thing, you generally move out of your house, go into the territory away from your house. You don't interfere in your day-to-day affairs of that typical house. And then what you do is basically, but at the same time, your grandkids or anything that you have, you encourage them to come to you. So you can teach them your tricks of trade, your knowledge, whatever that is there, you share on that account. And really do a win-win situation with the 3rd generation on that account. And I think this particular independent directors is more like that as a profession on that account. So I'm thoroughly enjoying that part where you don't have to play a role of day-to-day affairs. That you leave it to the people who are managing that show brilliantly. You are more like an advisory. There is no prescriptive day-to-day role, but at the same time, you get into not prescriptive kind of advices. You tell them what overall you have to do on that account, impart training to the right people on that account, get into one-on-one calls with them, have regular meetings. In that ashrama's time also, at some typical festival time, you get invited to the things. It is like board meetings for me on that account, board meetings, audit committee meetings. So you go into that particular part and, prepare yourself for the exit. And that is what I have done. Frankly speaking, there is not that it is a very easy kind of thing, because I am on about 9 boards and 9 boards of different kind of variations on that account. So we will discuss that particular part, but thoroughly I'm enjoying it. And I firmly believe that if somebody wants to really do independent director as a profession, I think someone can do that. And mind you, you get paid well as well. And as you grow and you upgrade and you get into better companies, your compensation also can increase commendably well on that account. Obviously, you take on more responsibilities, but you can phase out your things in a very structured fashion. So it's a good thing. I'm enjoying it.
Very well said, sir. Taking that point ahead, if one is really interested, how does one become an independent director? I mean, what qualifications, skill sets would you require to enter this world of independent directors?
I think a good question that you asked. Previously, there were no such great rules on that account. It was more like, mutual admiration club, or maybe, somebody who's my classmate, somebody who's from my school, somebody who will say, I am from, that typical industry as work kind of thing. So people would keep on inviting each other on that account. It was more like, I tap your thing and you praise each other. Mutual admiration club, as I call it on that account.
Right.
But now It's mandatory for everyone to become what we call the, there is some typical institute, IICA as we call it. You have to become a member of that. Indian Institute of Corporate Affairs, which is the Ministry of Corporate Affairs thing. You have to get registered. There is a typical proficiency test that you have to pass. Fortunately, it has been made exempt to quite a few people, but regular training is required on that account because, taking on anything like independent director is a very comprehensive and a very responsible kind of job. You just can't take it unless you are ready for that particular part on that account. But I always say, how do you, how one does become an independent director? It is like, I don't know whether all of you have studied annual report. In annual report, there is something called board skills matrix. There is something which is created by all the boards, which are publicly quoted. It's called board skill matrix, which is a report on corporate governance. That's an integrated part of it. That's where they talk about what are the typical characteristics a director should possess in that regard. It could be industrial or technical experience. It could be something like, strategy related piece, or it could even be something like commercial part, or even our accounting, then legal, all those kinds of things, specialization are there. And it is like, in 2020 cricket team, when you choose, you require, about 4 batsmen. Out of that, 2 should be opening batsmen. Then you have 4 or 5, bowlers. Then you require 1 or 2 all-rounders and positively 1 wicketkeeper in the side. So that skill matrix can decide which director will suit what kind of ability on that account. And by virtue of that, people tend to take these kind of roles on that particular thing. And I think so, if anybody wants to really become an independent director, what he has to do now? He has to do his own self-evaluation. Whether you are a bowler, whether you are a batsman, whether you are a wicketkeeper, and accordingly choose a team where you will fit in on that account. Then obviously that team, also like an IPL, will decide whether you are fit enough for that particular thing on that. So it becomes more like matchmaking, which is important on that particular part. So I may be a great wicketkeeper, but I may be at a small level. Then the senior team will not take me. A medium team will take me. So accordingly, you have to decide what fits you fine, and then you work on that particular part. But obviously, you have to do your own evaluation. And when I mean that, a team of 11, or when you choose, what I mean is this, batsmen are the ones who come with necessary relevant experiences of, technical skills, business skills. They have probably worked as CEO in another manufacturing companies of the same kind of industry, or an ex-banker who has, run the bank in his own way. They are the people who are like batsmen who come in that particular thing. And the opening batsman is obviously the chairman, who probably has more experience on that particular part. Then will come some bowlers who are like, all-rounders kind of thing. They are people from HR. They are people from, marketing kind of thing, because marketing is required by all kind of thing, advertisement, brand building, and strategy piece. So those are also some people. And then there are some typical, I would say, bowlers or wicketkeeper. Wicketkeeper is certainly a person like me, who's a chief internal auditor, comes from the other side, always a tough job he takes on. Or otherwise people who are risk manager, who like to go googlies, some news, new questions which people have not thought about it. So it's a mix of those people. You choose that kind of board on that account. So you have to see to it whether you will fit into that board, and then accordingly apply for it. Or number of times this, this headhunting agencies also help you out in that regard. So this is how it goes about. Great. And getting a big number or otherwise is something, it's a skill set that you have to choose what you want to do on that account. So that's how it is. So over to you, Samit, for the next question.
Yes, very well articulated. I would like to mention the fact about being an internal auditor and a wicketkeeper. Myself, I'm also a budding internal auditor, young one, but I do see the metal in what you are saying. So yes, someday I think.
No, I must tell you, people who are attending here, if there are any chartered accountants here and people who are lawyers, for them, there is always one seat is assured of that particular thing. Only thing you have to see whether you will fit that or not on that account, because they are the people who know Companies Act. They know, everything on what SEBI rules and regulations are about. You also know other laws and regulations which are relevant to that industry. If you are a banker and you have some experience, you will know what RBI has come out. Those are the right people who are absolutely great people who can sit into the board just like that, sitting on that particular part.
Absolutely. I think the growth should be from internal auditor to a trusted business advisor, as they say.
Yes.
Move to our next question, sir, a related one. How do you, in your case, choose the companies where you wish to onboard as an independent director? And what is the secret behind getting such a big number of directorships? If you may want to share something.
Yeah, I think it's a more out of choice that I have chosen so many companies. I'm enjoying it thoroughly. So far, I'm enjoying it. I'll continue with that number. The day I feel it's little too much, I will get out of those some of the boards on that account. I'm thoroughly enjoying it. I must tell you, it's again old time story. Today we call that as a due diligence exercise. Previously also, and I like to compare, this particular thing with my old, again, old tradition. Previously in old times, old villages, let's say my daughter I need to get her married, and I have to look out for a big family from some of those typical villages where they belong to our community, but I don't know them. Typically, it happens with Marwadis and it happens with a lot of people. You will see a lot of people who are getting married in other states, and you don't know much about them. And during that time, whatever due diligence that they were doing it, I think we have to do that for looking out for, whether I should take on that kind of company or not. Like old people, what they will do is like, they will visit that village. They will go move around that house to see how that culture of the house is, including what kind of toilets they are maintaining it, what kind of system they have. They will hobnob around their, friends in the neighborhood kind of thing. They will look at their relatives who are going to stay in that house because your daughter has to get married and stay there kind of things. So, you have to look at it. Then you will meet the boy also. And this is how, overall you come to the conclusion whether it is good or bad kind of things on that account. So in today's context also, the same side of due diligence comes in handy. Of course, Samit, you will not realize it because with your surname like Saraf, you don't require a due diligence to do because you know how to judge the gold or, any ornaments very easily on that particular part. And by virtue of that, due diligence plays a very important role because in this case, you don't have, you can't have a retrieval situation where you can, you can't say my daughter will come back if she's not happy there. It is equivalent of that for my, becoming an independent director. So you have to take those kind of due diligence very, very seriously on that account. And for that, I must tell you, there is one great book written by Dr. Ram. Written so many good books on the corporate governance and the board related part. He says there are three kinds of board or other culture of the board they have. There are three boards. One of them is called ceremonial board. Ceremonial board is where, you will who's who kind of people who are sitting on the board. They come from, relevant experience in UK, US, probably they have hobnobbed around with big people and all those kinds of people will come in. They are more on that board where, they are more happy discussing. Way back in London, I was doing that kind of thing. Nothing great kind of discussions are happening. Now, by and large, this particular board is not there anymore in quite a few big organizations, but these ceremonial boards are there. The second part is liberated boards, where, they are the owners are running the company. At the same time, you as an independent director can go and tell anything there. You can speak anything on that account. They will appreciate that particular part. They will say, good, Mr. Pinge, you're coming out with a great point kind of thing. But at the end of the day, nothing happens. They will continue to do the way they want to do on that account. So that is called, I call them as a liberated board. But frankly speaking, if you really want to enjoy, you should be in what we call the progressive board, where you can talk your point, they listen to you, they come out with a methodology and action plan as to how we can do that kind of things. Otherwise, they are blunt enough in telling you people, saying that, Mr. Pinge, I don't think we can do these kind of things. So those kind of agree to disagree kind of concepts is a good thing. And these are the progressive boards is something you have to look out for on that particular part. And I will also say, I can always say that, it is this due diligence exercise is somewhat akin to what private equity guys do for the company. But that is where, again, out of 10 companies, they can afford to let go a wrong decisions in 3 or 4 companies out of that because they can make money out of the remaining 6, 7. Here, you don't have much of a choice. All your companies should be good enough. Otherwise, just one bad company and it can put you down on that account. So this is how we had to, choose that due diligence exercise very, very seriously on that account.
So great. I think you've beautifully put the thought of the arranged marriages of yesteryears for the non-professionals who are also with us today. So I must, it was a great anecdote. Moving to the next question. As you rightly mentioned, there are no free lunches. in this field. Also, during our meeting, I recollect you did mention that independent directorship is a tightrope walking in today's complex world. Can you tell us some of your learnings through your experiences and maybe elaborate this?
Yeah, I love to talk about something else so that, emphasis can go into the thing. There is something called baking a cake. I'm sure if there are ladies in this, or even for that matter, a lot of people who know how to bake the cake. Baking the cake is a process on that account. And in that, you can see through the things that how it is getting baked on that account. You can smell it also. But at the same time, you don't dare to touch it, because otherwise that's a bad kind of concept in cake making on that account. So in independent director also, you need to have that smell test and also see test on that account in the companies. You should not be beyond that prescriptive in that. Prescriptive is like, putting the thumb onto that particular cake on that account. So this is where tightrope walking becomes very important. What it requires is have a lot of patience, believe in balancing the decision. Idea is not to say no, but how to correct that, get into what we call the solution orientation kind of thing, and creating a win-win situation. And this is very, very critical for the simple reason, number of times there is not a single or simple solution to everything in that account. Just to give you rattle out some of the challenges that you can come out with. I got some of the things and I will read it out for you. One of them is, there are many regulated entities. Out of my 9 companies, 4 of them are very, very closely regulated by 4 different regulators. Forget the Ministry of Company Affairs, that is there in all 9 companies. But you have SEBI, who monitors that commodity exchange. You have bank. I am on the bank board where RBI does that particular thing. I am on a housing finance board. There is a NHB, National Housing Bank, who does come for the audit on that account. And then obviously you also have this IRDA. I am on the insurance company. That is again a regulator by itself. That also does that particular part. So with every company which is more regulated, there is a huge amount of balancing that is required, because they keep on coming out with their own directions. They keep on revising it from time to time. They put a robust kind of, this process of inspection. And you won't believe, as a chair of audit committee, I am also a part of email. Number of times they send you email as a part of CC, and they mark there, this particular communication has also been marked to the chair of audit committee, as he is also responsible for it. So mind you, मान लो या ना मान लो, you are actively involved in that particular work, but at the same time, you should keep away from that and get the work done on that account. So it becomes a real tightrope walk in that particular part. And this is very critical on that account. Second one is regulatory compliance, be it be ethics, be it be whistleblowing, related party transactions. Now that's again a tricky one, where you have a promoter who can probably hold less than 20%, and he tries to put some related party together. That is where how to put it in a proper fashion can become a big kind of challenging point on that account. Transparency is very critical. I have seen some boards where the agenda comes a day before, and it becomes 500, 600, 700 pages. Do you think a human being, an ordinary, a person, howsoever brilliant he may be, can he do that 600, 700 papers? Can he go through in a day's time on that account? So I think there has to be clear-cut rules and regulations around that. There are, but despite that, generally by and large, don't encourage them to send those kind of things as late as possible. So by virtue of that, it is necessary for you to do that particular part. And then there is also like people like me, as I said, wicket keepers, like me and you. As an internal auditor or as a risk management kind of thing, since you are responsible for what they call the management assurance. And as I told you, in Reserve Bank of India, they also hold you accountable for that. You also can get a letter from RBI directly for wrong things. So considering all that, when these audit committees are going, I always believe they are more like, this Zubin Mehta's, the orchestra, the philanthropic orchestra, where there are more than, too many artists sitting there and doing that synchronized kind of singing. If the voice is quite okay, everything is great, the organization is working well. But if there are discords, let's say internal auditor is not happy talking about it, or maybe statutory auditor has some objections, then you have to see to it that you make that as a synchronized kind of orchestra. If there are discords, you try to sort it out on that account. So it becomes so much of, creating solution orientation, win-win scenarios, And though, I told you that I don't want to sit on the treadmill, I hate to do that. But there are instances, even yesterday, as long as that, we are coming with the IPO in one of our companies. There was a call at 7 o'clock in the morning from CEO to say, please, Mr. Pinge, can you help me talk to somebody so that, we can get, a typical kind of thing done from that particular part. So as a solution orientation thing and this kind of thing, these kind of work happens. So it's a tightrope walking, but so far it gets heard. And when you are not on that first two boards, but you are on a progressive board where they listen to you, they give respect, then you enjoy this thoroughly on that account. So though, as I said, though you are in that Vanaprasthashram thing, if you are respected for whatever you are taught and trained them people, and you are respected, your work is half done on that account.
Wonderful. Wonderful.
Yeah.
I'm sure it must be a very busy time being on 9 boards. How do you manage to stay relevant? What is the secret to that?
Good question. I think relevant is a matter of, how you really want to treat yourself on a scale of 10. And I always said that believe in resetting those kind of learning curve on that account. So what you learned few years back, I think important for you to unlearn that and relearn everything on that account. And I think unlearning is the worst part of life because, this is your mental attitude to come in. I've seen so many people talking about it. Yeah, but, a few years back, I did that. Fine, yeah, that was done. But today you have to relearn and do that in a typical kind of fashion because the scenario has changed. The background has undergone a change. The enablers have totally changed on that account. So this is very critical on that account. Another one, but which remains true, you need to get the best practices. You must know what your competitor is doing it. And I think this is where the top competitors, what they do, you learn from them. In Sam Walton's story, always Sam Walton says, who's a Walmart guy, he says, give me what good they are doing. Don't give me what bad they are doing. Because most of the people will tell you what bad things they are doing as a leader. I think you have to learn from them what is a good thing that you are learning. And this is what I always harp on to people to say, get those best practices so that it helps us learning on that account. So that is the second part. Third one, now today we are inundated and we are soaked into social media on that account. So I have put myself triggers by virtue of that. After some 8 o'clock or 9 o'clock, I get series of emails about all the companies and all the typical kind of catchwords which are there. By virtue of that, I know what is happening globally across, and I get those emails on a regular basis. So by virtue of that, I know what is happening in my companies, what kind of new proposals have come, what happens in the regulators domain, what happens in the industry domain. So a lot of things happen, and for which you have to entirely do the studies. And fortunately, there are only 9 things, but there are about 7 industries I'm connected with. So, I get connected with those people, including the promoters' names I'm putting in. So that's again one more thing that happens. The social triggering is really helping you out because you are always in touch with those people. Another one, and this I always tell people at the age of 62 here, I always say remain digital savvy. And I think digital savvy is very critical. And then that I always say, switch yourself from what I call, I am a digital migrant because I have worked on manual boards and manual processes. So I'm still consider myself as a digital migrant, but I think get out of that particular thing. I always say, get into, you are a digital native guy. So don't think, for instance, your father will tell you, who's also a chartered accountant, we used to have debit and credit, and then we used to have trial balances. Then we were spending time on tallying that trial balance. Then, when we are putting something on a computerization, we'll always say, ye debit karna hai, wo credit karna hai. Now, those things you have to forget because there are a lot of great enablers that have happened. By virtue of that, you don't have to think whether trial balance is tallying or not. So get out of that digital migrant attitude. Get into digital native concept. And that's something which is very critical. Believe in reverse mentoring. Now, today, at my age, I learned a lot from you in interactions, Samir. I think we had some 2 or 3 interactions. I learned what exactly youngsters of today, what they want, what they don't want, and learn from that particular part. And that's something which is very, very important. And last but not least, get into what you call industry knowledge, subject matter expertise. Today, I feel proud. Anything in internal audit, anything in risk management, and mind you, risk management also in insurance is different from risk management in commodity exchange and risk management in bank. You have to keep on learning, and I think you have to say, I am the expert. I will be one point of reference or many, and that's something helps you creating that thing. And I think if today you put these kind of enablers for you, it will be really very good on that account. I think we have talked too much about independent director. I think we should move to the other parts also.
Yes. Definitely
Thanks,
words of wisdom, sir. I think most of us know a lot more today than they did yesterday. So thank you for that.
Yeah.
Let's move now to the second part of the session. This was about the PE funds, evaluating MSMEs. So a specific question in this regard: what do PE funds look for in prospective targets? What are the must-haves if you are looking to raise funds?
Yeah. So I think I must clarify first of all, I have not dealt very intensely with the startup funds. I have dealt with PE funds which were very matured funds. They already had first round, second round, third round of equities, and they already have invested. They have learned from their own hardcore experiences, from their own mistakes or learnings, as I would like to call it, more than calling it mistakes on that account. So I dealt with those which were matured PEs. And let me tell you what exactly is their understanding. And I think that is something which is very important for our MSME guys who are running from, especially from our Saraswat chambers, to understand this particular part. One of them is invariably they put money in what I call sunrise industries. Sunrise industries are those which are the new upcoming areas or which has an ability to ramp up in a big way. The scaling up is possible on that account. So preferred are services. India is such a huge population. We have educated people on that particular part. So by virtue of that, scaling up, doing a great kind of service orientation is still there. And with China, becoming a little away from the global kind of canvas now, or it will happen over a period of time, India will come into prominence. So there is humongous scope for service industries where you will get a lot of money from those. NBFCs and financial services, invariably you will get it, despite the sort of thing that we heard in China, that mortgage finance company number 2 going into problems on that account. NBFCs and PFSI sector will always flourish. Digital specialization, and this is where digital specialization is a very concept where I can clearly see bank will get into a fragmented area over a period of time. Those hardcore, brick and mortar banking business will undergo change. It will be a fractional one kind of thing. A specialist will take on their own role, and over a period of time, that total value chain will get built up in a rebuilt in a different kind of fashion. So these kind of things will happen. Pharma is again an evergreen industry. We can't survive, and we couldn't have survived this pandemic if the pharma companies had not stepped up their particular levels on that account. Agrochemicals will play a critical role in India, as I can clearly see, because China is closing down even agro now chemicals. Though they have a raw material there, I'm sure Indians will step in that particular part on that account. Specialty chemicals has already done that. So these are some of the new industries which will have a huge P potential to come in on that account, and they will get better X of EBITDA, as I would like to call it in that particular part. The second one is, I think whatever you may say, promoters that means the board, and that is where independent directors also are very critical and important. I am on one of the things where private equity has come in based on some 2 or 3 critical names. So I'm not putting, saying that because of independent directors it's come, it's a win-win situation. They knew that this guy is good. The typical 2 people were on our board. By virtue of that due diligence was done very, very, very fast, and they got into our board very quickly on that account. So promoters, board members, and his team, where thorough due diligence is being done on that account. And literally it is like, they are looking out for what I call the test match player with 2020 agility. So even they look at long duration with which your CEO, COO, CFO is working with you. It is an advantage to have that kind of thing, because that is how they feel comfortable. It is not just board it will look at, but also look at other things on that account. Then they will look at new business models. I think today is a word for what we call asset light. Previously, people would say, my own complex is there, my own huge land and building is there, and I will work on that thing. They don't want to put money in that kind of thing. They want asset light models. They're looking out for consistent performance, and consistent performance duly audited by good auditors. And this is very critical on that account. Higher EBITDA is important because they have realized that post they're putting money in, EBITDA goes down. So they generally like a real juicy kind of EBITDA. They know it will go down. That sort of discounting they will apply is tremendous, and accordingly you will get your EBITDA earnings, X of that particular part. Margins have to be good. Market share they are looking out for, and the ramp up ability of that. And last but not least, cost thriftiness. in these bad times, are you concentrating on cost rationalization is important. Now, these are all right things that I'm talking about, but you will see even in last 1 year, a lot of money has come into private equity. Private equity money has come into good companies which had all these characteristics on that particular part. Nobody's exception on that account. So you have to work on this particular thing. One of the companies in which I was there, we were loss making. We have started making money because we got this private equity got in, and they had got in because of the board members that they were there, because of the role model we had. And we had created asset light kind of things on that account. We passed on that work to a lot of people during that epidemic time. It really helped in that particular thing. And then one important point is you must have right controls, processes, and right systems on that account. I've seen people take substandard kind of accounting methods. If anybody finds some typical accounting system is there, private equities start losing confidence in them. So you require the SAPs or the Oracles, financials, or all those big names to come in. You require good statutory auditors to come in. And for everything, what you require is standard operating processes, SOPs, right authorizations. And I think in that, I have seen a lot of MSMEs telling, wo baad mein karenge. There is nothing like baad mein karenge. It has to be done now. It is building of DNA today. Because if you are going to build a DNA today with 100 crore net worth, 100 crore turnover, you will get into that business. You may not have quality SOPs, but you require SOPs which are very critical and which are used on that account, because the ramp up becomes easy around that time. And creating right kind of authorizations at lower level is very good. Just live example I'm talking about. There was one company where I was an advisor doing private equity guy. They were doing 1,000 crore worth of turnover. Despite that, their MD at the end of the day will sign all his checks personally. I said, first of all, don't make payment by check. Correct. At the same time, don't sign everything by you. He said, no, I need to have control. A guy who was with 1,000 crore was insisting on signing those particular things. Eventually, he heard me because he says, "ठीक है, आप बोलते हैं तो करेंगे." Now, after some few months, he said, I got out of it. No frauds are happening. I said, anyway, frauds hone wale nahi the. You are unnecessarily wasting your time on that account. So I think there is nothing like good time. It is any time you have to have right SOPs on that account. And this is where I'm requesting all our MSME guys build good accounting packages, good kind of authorization structure around you, and create right internal auditors to work with you. You will start getting your value back. And that value will not come immediately right now, but in next few years it will come in. So I think that's for these people on that account. So
thank you for the valuable insight on this front. Moving to our last part for the day, which was about ESG, the new age concept.
Yeah.
How important is ESG in today's context as per you? And would it change the way the Indian corporates are working as of today?
Yeah. I think a good question that you asked. Today people are all discussing about ESG. Frankly speaking, it is not new to India. ESG consists of E, which is the environmental part, which we haven't discussed it, but we have probably not been working on that particular part. So this is something which I understand on that account. But S and G is already in existence for all of us on that particular part, I feel. Because ESG today is not just compliance driven, but it is becoming a long journey towards sustainability standards. And you have to create right kind of processes for you, which are meant for those particular things. So everything on ESG, environment, social, or corporate governance related part, you require precise KPIs. You require, right kind of measure to work on it, particular thing. For everything that you require measure. I will have, zero carbon. You can't get zero carbon today. So you will have little bit of carbon still coming out of your thing, but over a period of next 5 or 6 years, I will do this, I will do Y, I will do Z, I will put these kind of money in that particular part. So those KPIs are required on that account, which is very, very important. And I don't know how many of you are aware. We used to have what we call BRR, which is called business responsibility reporting, which was there for big, I would say, publicly quoted companies. Now it is called BRSR, where they put in that sustainability kind of report. It's a 35 or 34-page report consisting of many things on that account. But ESG, frankly speaking, if you are asking me from that perspective, is consisting of the governance related part, which is like risk management, shareholders' rights. Then you are looking at business ethics, then corporate governance. You tell me, we already have good laws and regulations working around that. If you take it seriously, frankly speaking, that piece of G is already compliant from Indian perspective on that account. When it comes to social, there are two parts: the SHE, which is the safety, health, and environment related part. And also you look at today's corporate social responsibilities. I think generally it takes care of people. Also, our HR policies or HR rules and regulations are quite good on that account. So when it comes to human capital, when it comes to customer responsibility, when it comes to community impact, when it comes to health and safety of employees and your stakeholders nearby, I think by and large, you are there on that particular part. Now, the remaining part which remains is more on the environmental part. And there also, I must confess, few industries are already ahead on that particular part. Now, pharma, for instance. Now, when I take a pill recommended to me by the doctor from a good reputed pharma, I don't even consider that will that be a problematic or not. I straight away take it with my water on that account. With peacefully I go and I get benefited out of it. Now that is possible because of the environmental related part on that account. They come out with the good products. They are creating right kind of natural resources use. When you are looking at that typical part, it means you know what you are doing it on that account. So, this is where I always believe that the only thing that remains unnoticed is climate change. And this is where we are India. So I think we are also opportunist country from that perspective. Now, for instance, agrochemical industry will come to India in a big way because Europe, America is already closed. China is also putting little halt to it. So probably India will be the first one to come in. But I think in overall globe scenario, I think if we get right kind of carbon credits and right kind of incentives from those people who are going to use it by way of a right thing, even if we do something, it will spoil some of our, I would say, the climate in India, but globally, it will take care of that particular part. So by virtue of that, we are all there. Right now, currently only GRI standards are there, which are the global standards as I call it. But at this point of time, most of the countries are coming out with tinkering with those particular things to meet with their requirement. And we also have come out with a similar kind of things on that account. So ESG, I feel, is a long way to come, and it will really help in really speaking, it will help investors to put in money. A right kind of rating, if you get it under that over a period of time. And for most of the companies like pharma and all, you will not find that they are not ready. They are almost there in 90% horizon. They require that last 10% to be complied with to get right kind of rating. If they get it, their finance costs will go down. And then most of the people will love working for them. So your HR part also will be taken care. So by and large, I must say ESG is arriving very silently into India in most of the organizations. Of course, there are aberrations. There are some industries which are still making pollution related part, but they are sometimes mandatory for India. So you can't right now get rid of them, but there are methodologies which are coming building around that. So over a period of time, ESG will get implemented with Paris Agreement, which India is committed. We will work on that particular part, but it will take a longer time. So it won't be fully on, but we are there almost, I would say something like 70% compliance is already done, especially on S and G. The E part is something which probably requires a lot more work on that account. So this is my humble opinion. I am not an expert on ESG in that typical sense, but I am also getting the perspective sitting on the board. Most of the people are taking it seriously, including MSMEs, because one important point you should remember is when somebody claims, like for instance, Infosys claims that they are ESG compliant, it means they are talking about their entire value chain is an integrated part of it. And value chain includes the people who are providing that raw material, including the people who are buying it on that account, up to that last leg, that's a value chain. So if MSMEs today don't get ready for ESG, they will get thrown out as a part of their value chain. Suddenly you will find you have been totally got out as a vendor, a preferred vendor from them. So this is very critical on that particular part. So I think these are all the things from my side on ESG.
Great, sir. I think we've covered and we've given some great insight. So I really thank you for that. I think we'll open it up for question and answers. I'll just check the chat window.
Yeah, sure.
We have one question from Mohit Bhende, is our member. I'll read it. Many industry players often find loopholes in every policy, including environmental policies. Corruption too is rampant. Shouldn't the government work at the grassroots level to imbibe environmental and social awareness right from schooling, and also educate its importance to industry players, so the decision to implement these environmental and social policies would be voluntary and not forced? It should not be seen as a cost center as most industries do. So your thoughts on it?
I think good thing that Mohit has asked. Mohit, unfortunately, we are living in an environment which is, we don't have much of a control on government related things. But I think by and large, today's generation, as I have clearly seen, and I'm talking about the third generation of industrialists, most of these people are taking everything seriously right from their childhood days. Now, those, I would say, overnight kind of people who have suddenly grown into business and they say, I don't care, kuch bhi karega business ke liye. Those kind of attitude is going down in a very big manner. So I think whatever you are saying is a wish list. It is happening. It will take some time. So probably me at the age of 62 will miss to see the real things happening. But I think India is changing for sure, is what my feeling is. I'm very bullish about India. And I'm also bullish about the global environment in that regard. People are realizing we have misused our resources. We have taken benefit of everything that comes our way. Things are improving is what I'm seeing. And another example I can cite is our own income tax collections. Samit is a right person. With GST coming in, a lot of unaccounted area is becoming accountable and the people are paying taxes on that account. So things are changing for good. I'm very bullish about India and I'm bullish about our group from that perspective.
Yeah. Thank you, sir. We'll move to the second question here.
Yeah.
It's from Mr. Gunnar Malvan. When promoters are selecting and inducting directors as the independent director, how come they are called independent? Are they not accountable or responsible to minority shareholders? Also, if so, is there no conflict of interest as their seat on the board is due to the promoters? Is it not time that Indian Institute of Corporate Affairs directly appoints independent directors, whether with or without the consent of the board?
I think good question. Gurunaji, you are asking a right question. As you rightly saying, it is the nomination remuneration committee which decides the directors. But at the same time, I must say that it is not that, promoters are the ones who select it totally. In big organizations, like for instance, I am sitting on many boards. I think promoters ask all directors. They also appoint an external agencies, which are recruitment agencies. I got recruited by two recruitment agencies on two boards. I will not be able to tell you the names. I didn't know the promoters at all. They probably knew me having dealt with me in ICSI earlier. Because of that two boards I joined, I didn't know promoters that well. Now I know them having joined on that account. So I'm not saying that it is totally true that this is really happening in a big way, or I would say it is this particular percentage is going down. Gone are those days when we used to have mutual admiration clubs where, my classmate, my buddy senior to me or my things junior to me will get into the thing. So that kind of thing is not happening in a big way. And at the same time, I must say that all of us as an independent director, every decision we take, I don't take decision for promoters. I don't take decision for some specific shareholder like private equity. I look at each and every shareholder. So when I am deciding on related party, I am looking at conflict. I am looking at any decision that is taken. Even in corporate social responsibilities, I look at it. Will my shareholder, and shareholder means the promoter shareholder, the private equity shareholder, the strategic shareholder, the big shareholder and also a single, minority shareholder and a small shareholder. There's a difference between these two also. All of them will get benefited. And I look at it, and that is important to think from everything, because tomorrow there could be a change of promoters. The new incoming promoter can ask you the same question on what basis you decided on that account. So I think good people are doing it. And of course, getting selected by this corporate affairs, the Institute of Corporate Affairs, I don't want to say that is the only institute. That is still yet to shape up in a real big way. But government appointment and also PSBs, that public sector banks and all other directors and all, there is a typical process which is done. Apparently, I'm told due diligence for the directors take nothing less than 2 to 2.5 to 3 years. Entire data of that gentleman is picked up from all the entities, from all the taxation related part, and based on that, that guy is selected. So I'm sure a lot of same things are happening in India. So it is not as simple to say anybody can walk into any of those independent directors. This is my opinion. There may be aberration somewhere.
Yeah. Thank you, sir. The next question is from Mr. Satish Shenoy. What is the most effective model for independent directors evaluation?
Good question. I think at this point of time, there are no such specific guidelines which are given by anybody. And I must say that, there are formal kind of evaluation happening in quite a few boards. And I must say, in quite a few boards in which I am sitting, there is something called lead director. Lead director means from independent director, there is somebody who is considered to be the senior in that. He is not a promoter, mind you, because he is also an independent director. So they sit down together, and I will give you two examples, two of the companies in which I spend time. We have specific committee meetings that takes place of independent directors when we evaluate all this particular thing on that account. And the sort of information prior to that we ask includes a lot of statistical data as to how many suggestions given by a director, what kind of defense that he came out with, what kind of suggestions he has done on that account. So that gets discussed. And by virtue of that, we will know what we have to do on that account. And live example I can start about, I will not be able to tell you the name of a person. He was the numero uno of one of the public sector banks. After retirement, he got inducted on a UK bank as an independent director. Apparently, after 1 year, he was given a right feedback. And this is something which has not happening in India, but it is not far off, it may happen. Why he has chosen to remain quiet, he was told. Why he was, he should have given more, I would say, more inputs, and that particular part was given. And then he was told what he can do to do it better on that account. So those kind of things are yet to come to India in a big way, but those things are happening. But as you rightly said by Satish Shenoy, we don't have a formal process in place. So some people can even evaluate a director to say yes, no. So no, nobody will give. Everybody will say yes, yes for everything. So by virtue of that, it can get completed. But then there are a lot of companies, and quite a few, I am sitting on quite a few of them. We have nothing less than 20 to 25 pages on which we put in thing together. And a lot of those things, we have a lot of these softwares which are there. Every software comes out with that typical inbuilt form which you can build around. So by virtue of that, you can get a consolidated findings for all the directors' performance. So it's happening.
Yeah, thank you, sir. And I think due to paucity of time, we'll just take one last question. It's from Mr. Amit Pandit. Again, he's a board member and the member of our chamber. The question is, governance in most Indian companies is only on paper. What is your view?
It is certainly on paper, but it is also off paper. That's the way I'll put it across. And I think we will only see the on the paper thing. One thing I can talk about, and I think this is where Amit is a good friend of mine. So I must say, every organization, when it reaches a certain level where they have to appoint an independent director, that means they have reached a threshold of, being a public limited company, reached a level where they are profitable, because obviously they can afford to pay for a new independent director. They have aspirations to go up in life. Nobody takes anybody lightly on that account. But at the same time, on paper kind of things is very rare to get, especially when you have good independent directors on the board. One thing I can tell you, previously, probably earlier times, it was all happening where there were paper meetings that were happening in quite a few companies, is what we have heard in the past on that account. But in today's life, with at least one of the directors invariably joining through video, and video conferencing recording is mandatory for everybody, there is no way you can take a decision on the paper without discussions on that account. And I think because of that, even today's life, circular resolutions are frowned upon by existing good independent directors. They feel that it has to be discussed. It has to be discussed in great details. Even if you don't organize a board meeting or a meeting, it's fine, but it has to get discussed. So we have those kind of decorums that we follow in quite a few companies. So those days are not there. Maybe some aberrations will be there, but not so much on that account.
Thank you, sir. I think we are closing in on 6, and I'd like to extend a vote of thanks. It has been a brilliant session. So thank you, Mr. Pinge. I'm sure the audience will agree with me that today was a masterclass on these 3 topics of independent directorship, MSME universe, and ESG, which is a new age concept. I would also like to thank the Chamber for arranging such an insightful session with such a learned speaker as today. Thank you also to the tech team who has managed the show at the back end. We again thank our sponsors for the support. And finally, thanks to the audience for tuning in on this Saturday evening. We would like to see you again for the future sessions, and please keep yourself posted on the announcements on WhatsApp and social media channels. Thank you once again. A very good evening and take care.
Thank you. Thanks, Amit. Nicely conducted. Thank you.
Thank you, sir.